Hello everyone, welcome back. I got some really good ones for you today on this Monday, December 1st, 2025. A lot's been going on with those markets. That's what we're going to be focused on for today's video. So welcome back. Glad you made it. Glad we could hang out together. Hope you had a wonderful Thanksgiving holiday, but it's back to business, right? So we're going to dive right in with these markets. We're going to do a quick market overview. We're going to touch on the four major asset classes we've been focused on since the inception of this channel, which is mega cap tech, energy, precious metals, crypto, and we're also going to talk about some other stocks you can look at, guys, ways to kind of pad your portfolio a little bit, get a little bit more diversification. You know, we believe that on this channel, diversification is a feature and not a bug. So since day one, we've been fans of spreading yourself around a little bit. That way you're not really as exposed to systemic fragility and risks. And whenever your favorite asset class that you married isn't doing too well, those other asset classes that you bought begrudgingly, those things shoot to the moon. That's like life's greatest irony. You know, that's showbiz, baby. So we're going to talk about the markets that we normally talk about, and then I'm going to throw some other stocks at you guys to take a look at. Now, nothing on this channel is a buy or sell recommendation. I am not a licensed fiduciary. I am not a financial advisor. I am just an armchair analyst on YouTube. But do your own due diligence. I'm going to kind of give you a scent so you can go hunt. We're like hunting dogs on this channel. We get a scent and we hunt. So don't take anything I'm about to share with you to the bank. But like I said, I'm just kind of giving you a scent and you can kind of go figure it out. Take this to your financial advisor and, you know, he'll give you his 2 cents. So let's dive right into it, shall we? So starting with that 10-year yield in the bond market. We always start with the bond market. We have the 10-year yield moving up about 5 basis points today. A little bit of fear in the market, but nothing crazy. We did see the 3 major stock indices sell off just a little bit on that rising 10-year yield. Now, 5 basis point pop, nothing too crazy. If it had been a 10 basis point move or a 20 basis point move, that would have been freaky. We would have seen the 3 major stock indices selling off a lot harder. But just a little bit of a bump to that 10-year yield. Right now it's hanging out at about 4.09%. In prior videos, we've been talking about looking for that 10-year yield to roll back over, move below 4%. That would be the bond bubble getting fattened up, the bond hyper mega bubble getting fattened up, and it would be the green light for other risk assets out to the end of the risk curve. It'd give them the green light to inflate. So we're not getting that right now. We're getting a rising 10-year yield. It was enough to cause a sell-off in the stock market, but nothing to write home about, right? So we had a little bit of pop in the 10-year yield, 5 basis points, nothing too crazy, but, you know, risk assets don't like that. Whenever I see the 10-year yield rising, I do think to myself, we could have a problem on our hands. Let's go ahead and take a look at that dollar. Because if bond yields are rising and the dollar's rising, dude, look out below. If you have the dollar rising, yields rising, rates rising, that's like the unholy trinity for risk assets. It kind of freaks them out. So I see the 10-year yield popping today a little bit, about 5 basis points. I look over at that dollar, but nothing crazy. The dollar's flat today, down about 0.04%. So nothing to write home about. It's not like we saw a fear trade, really. We'd want to see a little bit more of a pop in the dollar to confirm a fear trade, but we did have a little bit of a bump in the 10-year yield, and that did cause the S&P 500, NASDAQ, and Dow Jones to sell off a little bit. Moving on to that S&P 500, sitting right now at 6,812, down about 0.5% today, down 0.53% at the close, nothing too crazy. Got the NASDAQ also selling off a little bit, nothing crazy. The NASDAQ hanging out right now at 23,275, down about 0.38%. Then moving down to that Dow Jones. Dow Jones hanging out right now at 47,289, down about 0.9%. So almost a percent loss today for the Dow Jones. And that kind of led the way in the sell-off, but I mean, not even a percent, guys. So pretty flat day overall for markets. So kind of sum things up, a little bit of a pop in the 10-year yield. Dollar's still flat though, so nothing to get too freaked out about. Stock indices did sell off on that rising 10-year yield, but again, nothing too crazy. Moving on to Bitcoin, we have Bitcoin right now hanging out at 86,000 right now. It's been rough, guys, but we're hanging in there. I'm saying buy the dips. I can't call the bottom exactly, but you know, I was calling every day in Bitcoin above 100K a good day. Now we're below 100K, so hey, maybe to look to do a little bit of stacking some sats. If you're into that kind of thing, maybe, you know, throw 50 or $100 into your Bitcoin position and just kind of see if we catch a bid and start moving higher, or if we keep chopping around. I'm going to leave that to you. And I'm going to leave how much of that you buy to you too. You know, some of you might be like $50, $100. I'm looking to ape 1,000, you know. Be careful with that all at once, but sure, knock yourself out. I think Bitcoin is carving out a bottom. I think we're closer to the bottom than the top. I think by 2026, Bitcoin's going to be back at all-time highs, guys. I kind of got a $150,000 price target short to midterm on Bitcoin. So we'll see if that plays out, and throw trash at me when I'm wrong. So we got Bitcoin right now at 86,000, looking a little bit weak, especially, guys, with these rate cuts we're getting, QE coming back, QT ending like today. I think QT ended today. Could take a while to see that balance sheet for the Federal Reserve start to get fattened back up, but it's coming, guys. So look up the Fed website, St. Louis Fed, like look at the Fed balance sheet, and we're hanging out around like 6 or 7 trillion. We're looking for, in the coming months and years, that thing to get fattened up, like maybe all the way to like 15 or 20 trillion, guys. So be watching for that. Wait for that Fed balance sheet to get fattened back up. That's kind of your green light for risk assets to inflate. So Bitcoin at 86,000. We got Solana at $126. My price target on Solana remains $1,000. I'd like to see Solana flip Ethereum. Bit of a pipe dream, you know. I can't get rid of Ethereum, guys. It's the number 2 crypto. Check the market cap of that thing. It's probably like $500 billion. You know, $500 billion networks are very hard to make disappear overnight. But am I an Ethereum bull? Not really. I call that 2021 legacy boomer tech. And I'm looking for a coin like Solana to come along and bump Ethereum and take the number 2 slot. So could be Solana that ends up doing that. Could be XRP. Could be Cardano. You know, we've talked about some of these blue chip altcoins in prior videos. So I'll leave that to you to be discerned. But my favorite altcoin is Solana. Bitcoin is still number 1, though, guys. Make no mistake about it. Bitcoin's the mommy, the daddy, however you want to look at it. That's the king. That's the number 1 cryptocurrency. That's arguably the only cryptocurrency that actually works and is actually truly decentralized. So I'm a big fan of owning a little bit of Bitcoin, but if you wanted to do a little bit of speculating and gambling, you could also take a look at Solana, guys. I'm very bullish on Solana. Moving on to gold, we have gold at 4,265 per ounce, up 0.5% today. So we saw that dollar flat today, not catching a bid in a fear trade. Saw the dollar flat, and then we saw metals pulling out ahead further, which that's pretty ominous. That's pretty freaky, guys, because if you have like the dollar flat and the Dow Jones, let's say it went up 1% today. It didn't. It went down about 1%. But let's pretend it had gone up 1%. If the dollar's flat and the Dow Jones goes up 1%, but gold goes up 3%, in real terms, the Dow Jones actually falling, guys. So that canary in the coal mine, that gold, telling you something's wrong, man. And we've been fans of stacking physical gold and silver on this channel for the long term. So not to toot our own horn, but beat mother trucker. You know, get out of the way. We're doing great with those precious metals. But again, if gold keeps moving up, it's kind of a bad omen. And in a perfect world, I'd actually, even being a gold bull, I'd like to see that gold pull back. So we'll see if it happens. But gold up about 0.5% today. We got silver right now. Silver's really stealing gold's thunder. Silver's up to a fresh new all-time high of $58.45 per ounce. So $58.45 per ounce for that silver, up about 2.5% today. Silver does trade about 3x volatility to gold, so the glove fits. When gold is up 0.5%, it stands to reason that silver would be outpacing those returns by about a factor of 3. Glove fits today, guys. We have gold up 0.5%, silver up about 2.5%. So, you know, it makes sense. Now, do you think we're at the top for silver, or do you think we're about to make fresh new all-time highs and go into a real bull run? I'm leaning the latter. I'm leaning we're about to go into a heck of a run for silver. If you want to give you an idea of how high silver could run, go ahead and take that gold price at 4,265, divide that by 15, because that gold and silver ratio historically has been closer to like 15 to 1. So take the gold price, divide it by 15, that gives you a pretty good target for silver. Not sure exactly what that would put you at, but probably like the 90 to 120 per ounce range. So silver at only 58, you know, we're making up for lost time, guys. Silver stayed very low for very long, all through the 2010s. I remember buying silver at like spot $15, spot $16. Like I was a lonely bull back then. I was the only bull. and we've been waiting for silver to kind of wake up and smell the coffee. Even like a couple years ago, I was doing videos like, man, silver's only 22 per ounce. Like it has a lot of catching up to do. We're seeing that. So we're making up for lost time, guys. And silver's 1980 high was $50. So fast forward from 1980 all the way to today in 2025, we're only at $58. We're only $8 above the 1980 high. That tells me got a lot of room for upside here, like a lot of room. So it would not surprise me at all to see silver climb into the 60s, the 70s, eventually the 90s, maybe 100, maybe as high as like 150 per ounce kind of thing in the coming months and years. It might happen, guys. I hope not. And throw trash at me when I'm wrong, but you know, we might be in for something like that. So we're gonna see how far silver can run, but I think silver's kind of getting ahead. It's going to stay ahead, and it's going to lead the charge. You know, that's where the real excitement in the precious metal space is at right now, is silver, as it catches up to gold. You know, for a while, gold is doing so well, and silver is just like, man, like I know they mine this stuff as a byproduct, and half of it goes into like electronics, but dude, like where are we going with this? But now we finally see silver taking off, going to the moon. I think we're just getting started, guys. So I'll be very surprised if the top is in for silver, but in the back of my mind, I kind of hope it is, because, you know, I'm bound by the dollar empire. I'm an American citizen, so I don't like watching all my future income get eviscerated. I don't like working really hard and then getting little shavings of silver. I'd rather work really hard. Silver's pretty cheap, and I could buy, you know, a 10-ounce generic bar every paycheck instead of like a few flakes of silver, if that gives you an idea. So we've been fans of the precious metals on this channel. Gold, silver, platinum, stacking physical for the long term. It served us very well, but it's a double-edged sword. We're kind of watching the dollar get flushed down the toilet. If you take that 100-year gold chart and go ahead and invert it, that's your dollar chart in real terms. So if gold is screaming up, you know, up into the right, let's go ahead and invert that chart. The dollar's going down into the right. Dollar is just no floor for the dollar. And if there's no floor for the dollar in real terms, then there's no ceiling for precious metals like gold, silver, and platinum. So, you know, no floor for the dollar, which is kind of what we've been getting, is no ceiling for these risk assets, which is kind of what we've been getting. You see the glove fits. So got gold at 4,265, silver at 58.45, platinum at 16.71 per ounce. Big fan of platinum. Platinum's much more rare than gold. So for it to be much more rare than gold, like much more rare than gold, and still not even half the price, tells me there could be some upside there in platinum, but I'm going to leave that to you. Tech, mega cap tech, well, with the NASDAQ hanging out near all-time highs, we're doing quite well. The mega cap tech companies that we've been fans of on this channel would be Amazon, Google, Nvidia, Tesla, Microsoft, Apple, and Meta. Pretty much the Mag 7. It's like 40% of the S&P 500, but we were fans of those tech stocks a few years ago, continue to be fans of those tech stocks. We watched the AI bubble start. Like I did a video, AI wars begin. About a year after that, we talked about AI entering a bubble, but what did I say? I said bubbles don't burst, bubbles devil then burst. You know, so we continue to ride the lightning on that mega cap tech, but I mean, guys, these companies are unstoppable. So talk about access to unlimited capital, like they can borrow, like Amazon can borrow tens of billions of dollars at like a 1% interest rate, buy their own stock with it, juice the stock price like 16, 20%, and then keep the spread. Like these mega cap tech companies, guys, have real access to cheap capital, and then they engage in financial engineering. It's kind of crazy. So, man, they're low. That is a low-flying plane. Sorry about that. Keep those planes flying. We're going to need a lot of silver. I touched on it earlier, but just to let you guys know a little bit more to the silver game. Silver is a monetary metal. It is the money, kind of like gold is, but half of silver's application goes to industrial use. So we're going to keep these planes flying. We're going to keep these tech companies clanging and banging. We're going to need a lot of silver for that. And I think reality is starting to set in for a lot of these companies. Like, that's a strategic resource. We really need that stuff. So I hope you're doing a little bit of silver stacking. You know, even if it's something tiny, guys, like silver coins make great stocking stuffers. So you can buy some American Silver Eagles, throw that into the stockings on Christmas Eve, and hey, you just hooked up everybody in your family, you know. It's a good way to get you kind of like, I don't know, it's kind of like to get you started on precious metals. You know, just buy a few coins, maybe some 10-ounce generic bars. Don't go out all at once and spend $10,000 cash, but just start kind of, just slowly kind of scale into it. Buy a little bit here, a little bit there. Websites that you could look at, jmbullion.com is always done right by me. Guys, I don't get any kind of sponsorship from them. I'm just telling you. I go on jmbullion.com. I bought precious metals from them. It's worked out really well. But even better, if you don't want any sort of like paper trail or cyber trail of your purchasing, you can also check out local coin shops. If you just open up your Apple Map app in your phone or your Android or whatever, just type in gold and silver bullion or gold and silver coin shop or coin shop. You kind of get the idea. They're out there, guys. I'm sure there is one or two within 10 to 20 miles of your house and you never even knew about it. So they're totally there. Look for them and you'll find them. Walk in with a little bit of cash. Just say, I'm looking to do a little bit of gold and silver stacking. Pick some American Silver Eagles or Gold Eagles or 10-ounce generic bars. That's kind of what I like. I don't really like the 5-ounce generic bars. I mean, they're okay. It's silver. But I prefer American Silver Eagles and then like generic 10-ounce silver bars. So moving on from the, we kind of went over tech. We touched on Amazon, Google, NVIDIA, Tesla, Microsoft, Apple, and Meta being kind of the tech picks for this channel for the last few years. Nothing's really changed there. Moving on to energy, we got crude right now hanging out at about 59 per barrel. I remain bullish energy on this channel. I feel like the only bull. I'm the lonely bull here. It's hard to find fans of energy stocks. They kind of get bad publicity, right? Oil it's not sustainable. I totally get that. But on the flip side of that, the potential energy in like 1 teaspoon of oil is insane. And that's still the densest energy source we can find. We went from burning wood to burning coal to burning oil. It's the densest energy source we have access to, and we need that stuff. Talk about a strategic resource. And not to get into geopolitics, but I'm going to kind of float this past you. I think we're invading Venezuela for the oil, okay? I don't think it's about the drugs. I don't think it's about the immigration. I think it's about Venezuela having the 3rd largest oil reserve on the planet, and we're kind of eyeing that thing because that's been in our backyard. So, hate to imply that kind of thing. I hate to sound like a conspiracy theorist, but if I had to guess, I'd say the Trump administration, they're more interested in that oil than anything else Venezuela has to offer. When it comes to those energy stocks, we talked about them a lot on this channel, but ExxonMobil, Chevron, ConocoPhillips, Shell, and then for nuclear, CCJ, kind of the energy basket. For financials, we don't really talk too much about financials on this channel, but I mean, you can go back into prior videos. I brought up these 3 companies a few different times. We have BlackRock, Goldman Sachs, and JP Morgan. So, if we're getting into Bitcoin, we're getting into physical precious metals, we're getting into the Mag 7, the tech stocks. We own some energy companies. What else could we do to help diversify our portfolio? Well, you have these 3 financials I just shared with you: BlackRock, Goldman Sachs, JP Morgan. That's a good combo too. They all kind of focus on different things in finance. So it's kind of like peanut butter and jelly, you guys. I'd say BlackRock, Goldman Sachs, JP Morgan, that's like making a PB&J sandwich. The combination is almost better than the individual components themselves. So those 3 financials I really like on this channel for adding a little bit of diversification to our portfolio. Moving on to steel. We don't talk too much about steel, but I've had Steel Dynamics, stock ticker STLD, on my watch list forever. Big fan of Steel Dynamics you could take a look at. We also have Nucor, NUE is the stock ticker there. So a couple steel plays you could take a look at would be Steel Dynamics and Nucor, STLD and NUE for the stock tickers. Industrials, Caterpillar, Honeywell. Talked a little bit about those on this channel in the past, but I love Caterpillar, I love Honeywell. Consumer staples, we have Procter & Gamble and Monster Beverage Co. Guys, Monster Beverage Co., that's like the secret weapon of Alpha. Nobody really talks about Monster stock performing better than Bitcoin has. True story though, guys. Look into it. Look into what a monster stock has been. I think another hidden perk of Monster, there's actually a couple. I'll share them with you right now. Monster doesn't really have a lot in assets for what a cash generating machine they are. You might be thinking, well, that's not a good thing. No, it is a good thing. They don't really have much in terms of assets, but they're a cash machine. The way it works is they sold 16% of their company to Coca-Cola. Coca-Cola took a 16% stake in Monster, and in exchange, Monster has access to Coca-Cola's distribution channels. So Monster is just kind of riding the coattails of bigger beverage companies and generating a ton of cash. And they're just a cash-making machine. Another hidden perk, not having a lot to manage and yet making a lot of money and pushing a lot of volume. Like they only have like a couple factories, guys. But another perk would be they sell an addictive compound, right? So you have that friend, we all have that friend that's like, oh man, Monster and a cigarette, that's like the breakfast of champions right there, you know? So people that drink those white Monsters all day long, like that's real, you guys. So, you know, I'm not going to sit here and tell you to like invest in a cocaine distribution center. Like we're doing nothing felonious on this channel. We're not into breaking laws. We're law-abiding citizens on this channel. But if you want to go Tony Montana Scarface when it comes to your investing, take a look at Monster Beverage Co. It would do a lot better than even like these pharma stocks. And I'm not going to shill any pharma to you guys. So for consumer staples, we talked about Procter & Gamble, Monster being pretty good picks. Procter & Gamble, go look under your sink right now. Everything's Procter & Gamble. If it's not, then it's Johnson & Johnson. Between those two, like some of the brands that Procter & Gamble own, go ahead and Google brands that Procter & Gamble own. It's like 50 of them that you recognize. It's like, you know, just to give you an example, it might be like Ivory, Dove, Crest, right? Colgate, Glide, like just look under your sink right now. This will be a fun exercise. Just go dig under your sink right now and start looking for Procter & Gamble. You're going to start noticing Procter & Gamble on like everything. So they're a bit of a monopoly. I mean, they're kind of splitting the table with JJ, Johnson & Johnson. But Procter & Gamble, they stuck to consumer staples like toilet paper and deodorant, like all the things under your sink. And Johnson & Johnson started getting cute with like pharmaceuticals and vaccines and stuff. So Johnson & Johnson's a little bit of a woo-woo and a fugazi. And to me, I prefer Procter & Gamble because they know what they're good at. They know the game they play. It hasn't changed for like eons. I don't see it changing in the future. I don't care if we go into recession tomorrow. You're still going to need toilet paper. So there you go. Like Charmin, I'm pretty sure that's Procter & Gamble. Like Swiffer, I'm pretty sure that's Procter & Gamble. Your shampoo, your conditioner, just start looking for it. And then once you notice Procter & Gamble on the back of every bottle under your sink, you're going to start noticing it everywhere. So Procter & Gamble and Monster for consumer staples. Emerging markets, you could take a look at Vanguard, VWO, Vanguard's Emerging Market ETF, and then you could also look at EPI, Wisdom Tree India. Those are a couple of emerging market ETFs you could take a look at. I never shill foreign stocks to you guys, because when it comes to like a company that's, from the UK, like the FTSE 100 components, or like France or Thailand, just to give you an example, I'm not discerned enough to kick rocks and pick stocks when it comes to the foreign stock market. So I go ahead and I do indexes, ETFs for emerging markets, but you should have emerging market exposure. Get a little bit of your portfolio outside of the United States, a little bit of it, but make no mistake about it, guys. Even though we're like the biggest dollar empire bears on the planet, and we're like, man, things are not looking good for the United States, make no mistake about it. We have the corporations, okay? If you're living in the UK right now, if you're like a British citizen, your best bet right now is working for the British department of one of these American corporations. So you'd be better off being a British person working for Amazon, Google, Nvidia, Tesla, Microsoft, Apple, Meta inside the UK than you would working for like a UK company. And I'm not picking on the Brits. This goes for every other country, all the other 190 countries on the planet. be very careful. Be very careful with picking individual stocks when it comes to companies outside of the United States. Those US corporations, they still have the power, they still have the well-capitalized markets, they still have the most innovation, they still have the best run businesses, okay? So even though we're bearish on the dollar empire, we're still, when it comes to stocks, extreme bulls when it comes to the American way, guys. We like American corporations. Some of these American companies, multinationals, run by Americans, we stick with those, and they do extremely well and look to continue doing well. Like, I have no indication that the FTSE 100 companies in the UK are gonna flip Amazon or Google or any of these other American corporations. So, but emerging markets, maybe make that like 5 to 10% of your portfolio. And then a couple of consumer discretionary stocks you could look at would be Costco and Home Depot. So, I just gave you guys 25 stocks. I'm going to list them for you here in a moment. When it comes to portfolio construction, I want you, I'm not going to tell you what to do. A typical financial advisor would tell you to go 60-40 stocks, bonds. So they'd say 60% stocks, 40% bonds. But on this channel, we faded the bond market. We don't like bonds. We don't like cash. We do like stocks, though. So what I like to do, not telling you what to do, but what I like to do is pick 21 to 28 US stocks, or just 21 to 28 positions. It can also be emerging market like VWO and EPI, but I like to pick 21 to 28 positions. If you pick over 30 stocks, you might as well buy the S&P 500. Like, you'd be better off just buying the S&P 500. And if you pick under 21 stocks, you're too volatile. You're way too volatile. So I think 21 to like 28, somewhere in there, that's kind of like the Goldilocks zone. And it just so happens that I have about 25 stock tickers to give you guys. And then once you add a little bit of Bitcoin, a little bit of gold, a little bit of Solana, a little bit of silver, you're there. So we kind of went up, like, here's kind of the portfolio breakdown. Amazon, Google, Nvidia, Tesla, Microsoft, Apple, Meta, Exxon, Chevron, ConocoPhillips, Shell, Cameco, BlackRock, Goldman Sachs, JP Morgan, Steel Dynamics, Nucor Corporation, Caterpillar, Honeywell, Procter & Gamble, Monster Beverage Co., Costco, Home Depot, and then the Vanguard Emerging Market ETF, VWO, and then EPI, Wisdom Tree India, for like India, exposure to India. There you go, guys. That's 25 stocks you could go ahead and take a look at. And then once you sprinkle in a little bit of physical gold, physical silver, physical platinum, some Bitcoin, some Solana, maybe some Pepe if you're into the meme coins, there you go. So that's really a full portfolio right there. And then if you pay a mortgage, I'd go ahead and hang on to that real estate. And yeah, there you go, guys. That's a good way to keep yourself spread around. We believe in that on this channel. We are not Bitcoin maxis on this channel. As much as my heart goes out to them, I got a soft spot for the Bitcoin maxis. I'm not that convicted, and I'm not that convicted on any particular asset or asset class. We believe that diversification is a feature, not a bug. We're always pulling it in from somewhere. If you give me 5 asset classes to invest in, my favorite one is going to fall through the floor, and then the other 4 I begrudgingly picked just to be diversified are going to do really well. Life's an ironic trickster like that. That's showbiz, baby. So that's really all I got for you guys for right now, but I hope I gave you guys some potential picks you could take a look at. And yeah, I'm not a big fan of bonds. Won't be. Very low probability I will be at any point in the future. I like growth, some physical precious metals, some crypto. There you go. And some other stocks too, like those energy stocks, some consumer staples, industrials. We just went over it. So that'll give you a little bit of diversification. And those are all the, those are all the best at what they do, right? I tend to pick winners, guys. I don't want to buy a bunch of small cap, mid cap, penny stock companies and then hope I've, created the dream team. What I like to do is just find the Michael Jordan in each sector, like Amazon or Google or Boeing would be another one you could look at, or Honeywell or Apple. I like to pick winners in each space, guys, and get ahead and stay ahead. So go ahead and buy the Michael Jordan of each sector and just ride the lightning. That's really all I got for you guys for right now. We'll reconvene as things progress. Thanks for hanging out with me. Like, subscribe, comment, share, whatever. You guys are awesome. And we're just going to keep going, all right? Till next time.